Akil Stokes here, Chief Currency Analyst at TradingPower.com, and welcome to another weekend review video. I want to start off this week with asking you a question. Why are you entering your trades? And that's a serious question. We had a slow week in the markets, a short week too, with the holiday and whatnot and non-farms today. So we had a lot of time to do Q&A and just have some really good fun discussions in our live room. And one of the topics that came up today and this week is trading. And it made me think about, we always talk about how 90% of traders fail and you know, why is it that happens? Is it simply because of psychology and they just can't mentally handle it? That's a lot of it, but it's not all of it. At the end of the day, you can be as mentally tough as you want, but if you don't have a solid trading plan, if you don't have a system, a strategy that you follow that has a positive expectancy, then you're not going to make money. And I think that's where a handful of traders run into trouble. Most of you have learned to trade on your own, or going through Google searches, YouTube, all of that fun stuff, and you've learned a lot. I've done the same way. You've learned about ABCD patterns, double tops, double bottoms, all of these different techniques, not strategies, techniques. And each time you learn about one of these new shiny techniques, you're excited about going into the market and using them. And the problem is that many of you misunderstand these techniques for strategies, meaning you're thinking an ABCD pattern is a strategy that you can trade. And, if I continue to consistently trade ABCD patterns, I'm going to make money in the market. If I consistently trade double tops or double bottoms, I'm going to make money in the market. And that's not true at all. Although these tools are great, they're great techniques, they mean nothing if you don't kind of put the puzzle pieces together and use them with each other. And I want to show you two trades today that demonstrate that. The first one is going to start on, let's go to New Zealand dollar. And this is actually an example we looked at today. There's a trader that is coming through my training course who brought this to my attention. I wasn't trading it, and he's almost at the end of it. So he's disciplined enough that he didn't enter the trade. But I think it serves as a good example for the point I was getting across. If we go to the Kiwi, the New Zealand dollar on the 1 hourly, you'll see a beautiful harmonic move in ABCD pattern. So we're looking at something like that. Boom, A to B, B to C in the form of a retracement. And then if we clone this and bring it on down here, you'll see, bang, a wonderful ABCD pattern. Essentially, we came down and bottomed right at that level. We can also add in some Fibonacci confluence, taking our Fibonacci extension tool, dragging that from our A leg to our B leg, and back up. I thought we had a 1618 down here. We're close. We're in the zone. We have a 1618 close to it. Let me just see something. Is this a 3 drives as well? Sorry, I haven't talked about this chart a lot. Look at that. Oh, even a 3 drives pattern, even better. Let's clone this one more time, and you can see a 3 drives pattern down here. So you can see the market's been moving very harmonically. Essentially, we've been doing equal moves down, and then we've been retracing, and then putting in equal moves down once again. And we're coming down to a level where we're saying, hey, the market has retraced twice already after these harmonic moves. Third time's a charm. Let's get involved. Now, many of you are watching this video and you're seeing the fact that we did bounce off this level and shoot up. That was due to the non-farm payroll that came out this morning. Just because if you happen to enter this trade, you would have made some pips, you would have made some profit, doesn't make it a good trade. Remember, what's the difference? What do we define a good and a bad trade as? A good trade is one where we follow our rules, win, lose, or draw. A bad trade is one where we break our rules, win, lose, or draw. And in my opinion, I told the traders this in the room this morning, this would have been a bad trade. And the reason why is, well, if you just take a look at New Zealand dollar, if we scroll out our charts, you can even go to a higher time frame, ask yourself this question: what are we doing here? I mean, just look at the chart. What direction are we moving? Right? If we've got the same pair of eyes, you're seeing what? You're seeing a movement from the upper left-hand corner down to the bottom right-hand corner. That screams bearish trend, bear trend, bear trend, bear trend. If we're in this heavy bearish trend, is getting bullish down here, is that the right move to make? Are we getting involved on the right side of the market? Probably not. And again, sometimes it will work in your favor, but more times than not, you're going to get burnt by it. And then you're going to come back and you're going to wonder, well, do these ABCD patterns really work? Because I'm getting stopped out more than I'm making profit off of it. And then you get into that level where you're either consistently break even or you're just doing a slow leak of your account. Now, again, if we had a major level of structure down here, that would be a different story. But the point is we want to go through that IPDE process before each trade. Identify, predict, decide, execute. When we identify, we want to identify what is the market doing, right? Identify, predict. What is the market doing? What is the market likely to do next? And when we go through that process, at that point, we want to make a decision. No matter what the technique is, ABCDs, double bottoms, double tops, whatever you have it, what side of the market do we want to be on today? Do I want to be on the bullish side or do I want to be on the bearish side? And we want to focus our attention on the side that we choose. So me personally, for this trade, I would be looking for the next bearish opportunity. Again, the market has been going down, going down, going down. We still have room to the downside. I think our next structure lows are, let's bring a line down here. Our next structure lows are really, we have some closes right here close to market. Our next structure lows are really down here at the 65.70 level. So we can continue lower here on New Zealand. Even if you're someone that is, you pay attention to fundamentals and you say that, hey, right now the dollar, despite a bad release today, the dollar is one of the strongest pairs out there. Why? Because interest rate hike. New Zealand dollar, what they just do, they just cut rates and they may cut rates again. So even from the fundamental standpoint, you want to be bearish here. So what I would be saying to myself is I want to identify what the market's doing. We're going down here. I want to predict what the market's likely to do next. The market is likely to get to our next level of structure down in this area. And the question I want to ask myself is not only where is the market likely to go, but how is the market likely to go there? And we know that, if I can move this thing, there we go. We know that once we get a new structure low here, new structure low should be followed by what? It should be followed by an outside return. So the question I have is, where can I hop on the retracement? Where is this market going to pull back to, and how can I hop on? And looking left, and I'm not going to, I don't want to turn this into a whole lesson on structure. I'll tell you some places you can go for free where you can learn about that later. But the area I would be lining up is right here, our previous structure low, and our most recent outside return. And this would turn into my kill zone, or a kill zone for you guys that like doing that. So I'm asking myself, in this area, where can I get short and hop on this trend? And we can do lots of things to identify this area. We can shrink this kill zone down by doing what? Fibonacci retracement. Look at that, 618 right in there at previous structure. Let's see if we just take a higher one here. Again, it's my first time really looking at this. So I don't know, but you can do the normal tools that we do to break down our kill zone: fib retracement, fib extension, harmonic moves on a lower time frame, RSI, the normal stuff. The point is, the decision I want to make is I want to be bearish on this market. So I'm taking my brain. I'm only looking for bearish opportunities. Now, another good example of an ABCD pattern, one that would be a good opportunity in my opinion, would come on the dollar Canada. And I want to make sure I didn't have a chance to fully reload my battery, so I want to make sure my camera doesn't die on me. Get through this thing quick. Now I'm on the weekly on Canada, and the two things I see are right here. We see previous consolidation right here back in 2009, a long time ago. But more importantly, we see current consolidation up here on the weekly chart. And for you guys that have been following Canada for a while on the daily chart, again, you see what we've come up here. We've consolidated. We had a little markdown right here. Price action came back into structure. Thought we may see a continuation down, but we didn't quite get that far. And now we've just broken our previous structure levels, coming right back up into that previous consolidation. So I would expect to see some type of reaction up here with dollar Canada. And again, how can I get involved? So the mindset I'm in, identify, predict, decide, execute, is I want to get short, right? I want to get short at this area. If the opportunity provides itself. I don't just want to sell for no reason, but I'd rather look to get short in this area rather than get long. So I'm taking half the battle away. And we can do the same analysis like we did on the Kiwi. We could take a harmonic move here. Let's just Boom. We can take swing low to swing. Come on. Here we go. We can take swing low to swing high, our A to B leg. We can look at that retracement. I can go ahead and clone this initial leg here. And you're going to see that I'm going to get a harmonic move right at these structure highs. Now, again, what's the difference between this and the New Zealand trade? Akil, they're both ABCD patterns. What's the difference? Well, this ABCD pattern comes right at previous structure. I have an easily come on. I'm not used to, I use Ninja more than TradingView. I'm talking about TradingView today, so I'm still using it, but see, it's not as easy to use. It's great platform, not as easy to use. But we have our ABCD pattern here, right? We have our structure level right here. If I'm a bearish trader, I know exactly where stops need to be. Boom, above previous structure highs. Why? Because if we penetrate these structure highs and this level becomes invalid, I know that I'm wrong. And if I know that I'm wrong, I want to be out of the trade. And you can set up your risk reward accordingly. With the New Zealand, again, we were kind of in no man's land. Not only were we going against the trade or against the trend in a pure counter trend move, but we were in no man's land. There was no safe place to really put a stop loss that would tell us that we're wrong and to get out. And we can have a stop loss in, but it doesn't necessarily mean we're wrong because there's no structure to justify that. And I'm sorry if this is a little confusing. I originally had an entirely different lesson I want to teach. I want to talk about trend continuation trading and catching the outside return. And then this was a perfect example that came up today. And I have been getting a lot of questions about it. I have been seeing a lot of traders post here on TradingView of just, I don't like judging other people's trades, but some stuff that just is like, why would you do that? So hopefully this video will help them. But you guys can see the difference here. Again, we have previous structure, we have protection, and that's what we're looking for in a stop loss. We want to have protection. So, we also have, we talked about this earlier. Sorry about that. Camera died. But we also have this one here. If we look at this formation, and some of you are seeing this already, we have a potential advanced pattern as well. If I take these highs, we're looking at a swing high to swing low. Fibonacci retracement, we pass our 618. That puts us on Gartley pattern completion. And for my Gartley pattern D point, I'm looking at a move up to my 127 extension. So looking for a potential Gartley pattern completion like this, X to A to B, B to C, C to D, a little bit below that ABCD pattern completion. So if you're a CTS trader out there, combined technical score trader, and maybe you're not a trader on the daily chart, maybe you just don't trade Gartley patterns, you can kind of use this to build your case for entry. Not only do you have structure, not only do you have a harmonic move, ABCD pattern completion, you also have an advanced pattern completion there as well to build that reason for entry. So that's what's happening on dollar CAD. I think that's enough for today. Again, my battery, I just recharged it a little bit, so I got a few minutes left, but that's it for the weekend, guys. Enjoy your 4th of July. Hey, no live room tomorrow. If you need something to do this. Go over to our website, www.tradeempowered.com, and check out a few things. Again, I've been blogging about 3 days a week, advanced pattern recognition, the thin line between positive and negative. But more importantly, take this time to take the free time, if you have it, to educate yourself. You can always go through my playlist here on YouTube, the weekend review videos. There are 100 of them that you can listen to. Those are fine by themselves. But also go to our website, go to the Learn to Trade section. Take some time to go through the free training on here. We have lots of hours, lots of articles, lots of a few audio files. We have videos for days, and we even have a few training courses. I'm running into a lot of traders that don't know about structure. A lot of traders that trade patterns, they trade this way, they trade that way, but they have no idea how to read a price chart. If you were to ask them, hey, are we in a bullish trend or a bearish trend? They, both. They have no idea. And I'm sure many of you out there are like that as well. Here's what I recommend doing, and do it in this order. Go to our website, watch the Into the Gray training session. It's a free training session right here. How to read a price chart using new structure high / new structure low principles. This is going to change your life. You will know how to read a price chart. And if you know how to read a price chart, you're going to understand what side of the market to be on, kind of like in the video I just showed you. You also talk about if-then statement as well. That's always good. Adding structure to your trading plan and whatnot. So watch Into the Gray. I think this is a pretty short one. This was what, a 3-hour training event. When you're done with that, if you want some more, if you're hooked to the trading power drug, don't worry so much about the 2618 right now. As a beginner trader, it's not as important that you guys understand the strategy. It's more so important that you understand how to read the markets. Because again, if you can't read the markets, strategies, aside from just being an advanced pattern trader or something like that, or if you have a systems trader, strategies aren't going to do you much, because you want to find those high probability entry points, meaning where everything's aligning. If not, you're going to get eaten alive, I'm telling you. But after Into the Gray, go down to our turning point. This is the big one. This was about, what was it, a 4 or 5 day event me and Jason put on a few years ago. Fantastic. Probably one of the biggest free training events we've ever done. It was great. So make sure you watch that. That should take you a while. Your goal shouldn't be to come out and trade right away. Your goal should just be to come out with a better understanding of the market. So camera died again, but I'm going to keep recording so you don't get to see my pretty face. But you guys have a great weekend, 12-week transformation members. Of course, I will see you on Monday for our private Q&A session. Live room members, I will see you in the live trading room for another excellent week of trading and discussion. Syndicate members, I'll see you all over the place. Trade floor, on the website with the videos I've been doing. And until next time, plan your trade, trade your plan. Have a great week.